Hello everyone, my name is Dr. Joshua Aura. I teach management accounting at Regional Center of Management. Today I would want us to look at variance analysis, and specifically I would want us to do this particular question of variance analysis from ACCA textbook. The question reads, the standard material cost of product D456 is as follows. We have material X 3 kilograms at $2 per kilogram, material Y 5. During period 2, 2,000 kilograms of material X costing $4,100 and the 2,400 kilograms of material Y costing $9,600 were used to produce 500 units of D456. Required 3 requirements: A, price variance, mix variance, yield variances in total and for each individual material. So straight away we tackle the first one, which is the material price variance. Material price variance. So my good students, how do we normally get material price variance? Look at this. Price variance, price difference. We've got 2 prices. We have the standard price minus actual price, yes. Multiplied outside here by the actual quantity of these materials here that were done what here? Purchased. So remember that this SP is supposed to be standard price per kilogram, which has been provided in the question there. What is that standard price which has been given there? Somebody per kilogram for material X? 2 minus actual price. The actual price for this particular material, if you look at the question very well, they have not given us the actual price per kilogram. So what we shall do, we can see that the total cost of material X was 4,100. So to make this a price per kilogram, we'll take 4,100 divided by the quantity that was purchased by this money. Of course, we can see there that they purchased 2,000 kilograms. So then this will be the price, actual price per kilogram. Outside here, we have the actual quantity that was purchased. For material X, we purchased 2,000. So times 2,000. So please, using your calculators, you should be able to give us this variance. How much did we get?
100.
100 negative, isn't it? But you see, we don't write negative. We simply know that that is bad performance. We put in brackets there, adverse. We go straight away to material Y. Material Y, we are using this formula. The standard price per kilogram of material Y, I can see is 3.6. Minus the actual price of material Y, this one has to be calculated. To get the actual price of material Y, we will take 9,600, which was used to buy how many kilograms in total? 2,400 kilograms were bought. Outside here multiplied by the actual quantity which was purchased. 2,400. Then this one here will end up giving us what figure, somebody?
960.
960 adverse. So this is how you organize it in kind of a table. So that at the end of it all, you should be able to combine the two to give us what we call the total material price variance. Material price variance. You combine the two. So this and this will give us what here? 1060 what? Adverse. 1060 adverse. And then now, allow us straight away to go to the next requirement, which wants us to give them the material mix variance. Please write there for me in full. Material mix variance. Material mix variance. So we've written a good title there. Material mix variance. Material mix variance. Material mix variance. Now, before I tackle that material mix variance, I would want us to go back a little bit. Remember, the grandfather of these variances here, material variances, we normally call it what here? Material cost variance. Material cost variance has got 2 components. We have what we call the material price variance and the material usage variance. This usage variance is further classified into 2. We have what we call the material mix variance and the material yield variance. So please draw this, and then if possible write these things in full somewhere there. just in brackets, tell us that MCV is the material cost variance. MPV is the material price variance. MUV is the material usage variance. Material usage variance. Material usage variance. And then we have here material mix variance. This is the material mix variance. Material mix variance. This is the material yield variance. Material yield variance. Material yield variance. So what does this mean? I would want you to understand these things here from the word go. That if you add the material price variance and the material usage variance, the total variance that you will get out of this should be exactly equal to the material cost what? Variance. The same case with the children of the usage variance. If you take the material mix variance and add it to the material yield variance, we should be able to get what we call the material what? Usage variance. Is that okay? Usage variance. So now the question that I would want to pose to you is this. Is there somebody who remembers the formula of material usage variance? Material usage variance. How do we get material usage variance?
Standard quantity on actual production.
Yes. So to get material usage variance, even if the examiner never asked us to calculate it, because it is the parent, it is the father of the material mix variance and the material yield variance, allow me to calculate this material usage variance. Usage variance is a quantity variance. Difference between two quantities. So we have here standard quantity minus what we call actual what? Quantity. And then outside we have a standard price. We come and monetize. So the key thing here is that we are calculating a usage variance. Usage variance, difference between two quantities. Standard quantity minus actual quantity. And then outside we have the standard what here? Price. For monetization purposes, anytime you have got money outside, money has got to be standard. Now the other thing that you're supposed to know is that this capital SQ stands for something very important in full. It stands for standard quantity for actual production. Standard quantity for actual production. So standard quantity for actual production. Standard quantity for actual production. And then this AQ is the actual quantity of materials that were done what? Used. AQ stands for actual quantity of materials that were used. And then we have our standard price per kilogram. So I want us to compute the material usage variance for each of those types of materials that we have there. We start with X. So X, what do we have there? Please, whenever we talk of standard quantity, always throw your eyes to the standard card. The standard card, the examiner has told us there expressly. The examiner has told us there expressly that the standard material cost of product D456, the standard material cost, that is what we are calling the standard card. You can see material X from there. How many standard quantity kilograms are we given there? 3. But remember, because of this mention of the word actual production, the actual number of units that were produced must be used. Actual quantity that was produced. If I can remember very well, down there before the requirement of this question, we are told that in the period, how many units of D456 were produced? 500. So standard quantity for actual production. So it will be 3 times 500. 3 times 500 minus the actual quantity that was used. Actual quantity of this X, material X that was used was 2,000, isn't it? 2,000. And then outside here we have what we call the standard price per kilogram. The standard price per kilogram. Standard price per kilogram is 2. The standard price per kilogram is 2. 1,000? 1,000 negative, which is a poor performance. What we are calling what here? Adverse. Now straight away we go to the second type of material. Material usage variance here for which one?
Y.
For Y, yes. For Y. Do you have the answer for that? Material usage variance for Y. Material usage variance for Y. For those of you who are watching us from home, you need to be taking notes as we dictate them. Very, very, very important here. Write down as if you are in a live class. So material usage variance for Y, this will be equal to, you simply follow the formula. Standard quantity is?
Actual production.
So the standard quantity given there is 5.
Five.
So 5, but as the brother is telling us here, it has to be standard quantity for the actual production. What was the actual production? You gave me a figure of what here? 500. Minus the actual quantity of Y that was used. 2,400. Multiply outside here by the standard price of Y per kilogram.
3.6.
3.6, yes. So could you kindly then give me this variance?
Yeah, 60 favorable.
360 favorable, 360 favorable. So please come and give us the total here. Total material usage variance.
640 adverse.
640 adverse. 640 adverse. 640 adverse. So when you are adding your variances, whenever you see, of course, an adverse, you must put a minus. You subtract, isn't it? So minus 1,000 plus 360. Is that okay? You'll end up getting that 640. 640. 640. Are we able to get that? Thank you very much. Now remember that this usage variance has got how many components? 2 components. Material mix variance versus what here? Material yield variance. So mention now there, I don't know you're going to mention it for how many times, but importantly is for you to know that now we are tackling a variance called material mix variance. Now what you're supposed to know is that the material mix variance is only applicable in scenarios where 2 or more ingredients must be mixed for us to get some final product. So very, very important hint there that the mix variance is only applicable whenever 2 or more types of ingredients have got to be put together for us to get some final product. So we have got 2 or more ingredients which must be put together. 2 or more ingredients which must be put together to develop some final product. Some final product. Good example, like the concrete that we are seated on. This concrete which is able to carry out us, this slab. For these people to have come up with this slab, they mix 3 things. What and what and what?
Cement.
Cement, sand,
Water.
don't count water, okay. Ballast, isn't it? And the ballast, you're right. And the ballast. So very, very good. Please remember here that for material mix variance here to work, we must be having at least 2 ingredients. At least 2 ingredients. And how do we get this material mix variance? It's very easy. You will get what we call the standard mix minus the actual mix. And then we monetize this by multiplying with what outside there? Standard price. Please write that in full. So we have here standard mix minus actual mix multiplied by what we are calling the standard what here? Price. Is that okay? Multiplied by what we are calling the standard price. Now there is something I would want us to qualify and understand from the word go. This is supposed to be standard mix of the total. Please continue writing this one here, of the total. Of the total. Of the total actual inputs. Of the total actual inputs. Standard mix of the total actual what here? Inputs. Minus the actual mix, which is the same as the actual quantity that was done what here you used. Multiplied outside there by the standard price per what here? Per kilogram. multiplied by the standard price per kilogram. Now listen to me, this is a simple thing that has been tested in CPA for so long, a simple thing that never misses in ACCA F5 exams. Very, very simple. So the very first thing we will do is to develop this standard mix. How do we get this standard mix? It's very easy. You simply give us what we call the standard proportions. Standard proportions from our card, we have XY. We have XY there. Please go to the standard card. The standard card, how many kilograms were they planning to use of X?
3.
From the standard card, because we want the standard proportions, we use the standard quantities from the standard card. So you are right, so 3. How about Y? 5. So in total? 8. So proportionately, this will be 3 out of? This will be 5 out of? 8, yes. We call these ones standard proportions. In mathematics, there is this particular term that we use here, standard mix of. That of stands for what in mathematics? Multiplication, isn't it? Of means multiplication, yes. Now, so you're going to take these standard proportions, multiply them with what? Listen to me. It is a standard mix of the total actual input. So please come down here and give me the total actual input. Somebody there, the total actual input. What went? Very good. 2,000 is the actual quantity of X that was used. Plus, how many quantity units of kilograms of Y went into production? 2,400. 2,400. Which will end up giving us what here? Somebody 4,000? 400 like that. 4,400. 4,400. So what we shall do is now to take the standard proportions and multiply them with the total actual input, which is 4,400. 4,400, like that. So standard proportions multiplied by the total actual input. Remember, by definition, we say that material mix variance equals into brackets standard mix of the total actual input. Of means you multiply with the total actual input. And the total actual input, the one that you've given me, is 4,000 what here? 400. So when you multiply these, I hope you guys are getting beautiful numbers. 1650. This is 1650. 2750. 2750. 2750. Is that okay? Thank you very much. So the name that we shall give to this column, the figures that we've obtained here, will basically be our, this will basically be our standard what here? Mix. This basically will be our standard mix. Now please, a quick reminder, the formula. The formula of material mix variance equals what, somebody? Material mix variance equals? Standard mix, minus what here, somebody? Actual mix, multiplied by standard price per kg, you're right. So kindly come and give me the material mix variance over X. The material mix variance of X, are we able to see the standard mix of X somewhere? Yes, I can see 1650. Are we together? Yes. Minus the actual mix. Actual mix, what do we have there? Actual mix. Actual mix is the same as the actual quantity of X that was used. 2,000. 2,000. The actual mix, what went into the mixture is 2,000. Outside here multiplied by the standard what here? Price per kg. Please go to the standard card and read for us the standard price per kg. Standard price per kg, I'm being told, is 2. So this one here will be equal to what at the end of the day? 700. 700 adverse. It's negative, and you can see it clearly from here that we intended to take into the mixture 1650 kilograms of X, but we ended up taking more. So it impacted on us what here? Negatively. So it is 700 adverse. 700 adverse. Is that okay? Yes. Now from there, kindly come and give us here the material mix variance of Y. The material mix variance of Y. The material mix variance of Y. The material mix variance of Y.
2750.
Very good. The standard mix of Y, I'm being told here by my friend here, of Y was 2750. It's here. Minus the actual quantity of Y. Ladies and gentlemen, this actual mix is the same as actual quantity that was done what here? Yes. Same as actual quantity, which 2,400 multiplied by the standard price per kilogram.
3.6.
3 point what here? 3.6. Were you able to get the total there?
1260.
1260, adverse or favorable? Favorable. So in terms of Y indeed favored our performance, because for Y we had set aside 2750 to be utilized to produce our product, but we ended up using what here? So we saved. So that is a favorable variance. That's a favorable variance. So come and give us here the total. So what will be the total material mix variance? Total material mix variance will be equal to what?
560.
560. Adverse or favorable? Favorable, eh? Favorable is bigger. Favorable is bigger. So as I combine my items here, minus 700 plus 1260 comes to 560 favorable. Is that okay? So material mix variance, what have we learned about material mix variance, especially pertaining to the formula? Material mix variance equals?
Standard mix.
Mix minus?
Actual mix.
Outside multiplied by what here?
Standard price per kg.
Thank you very much. Thank you very much. Now from there, we go to what we call the yield variance. We go to what we call the yield variance, the material yield variance, the material yield variance, the material yield variance, material yield variance. Now, every time an examiner talks of yield variance, please, you have always to start doing that question by writing down the formula of material usage variance, because they go hand in hand. So whenever they ask you to give them the material yield variance, first write the formula of the material usage what here? Variance. So how do we write this? Material usage variance will be equal to capital SQ minus, do you still remember this formula? Capital SQ minus AQ, done what here, somebody? And then outside here we have the standard what here? Standard price, yes, standard price. So this is quite synonymous with the material yield variance formula. The material yield variance formula will have every other thing the same. You'll be having here capital SQ. You will be having here minus something. Outside you will be having standard price just like we had for the usage variance. The only difference that comes between the usage variance and the yield variance is basically here. For the yield variance, we normally use what we call the standard mix, which fortunately we have computed. 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 So my material yield variance here will be equal to what, somebody? For X. I want us to go slowly here. Material yield variance for X. Material yield variance for X. Material yield variance for X will be equal to what here? For X. Remember, anytime you see capital SQ, always remember that it stands for standard quantity for actual production. Where many students go wrong in this type of questions, they will go and pick just the standard quantity up there, and then they fail to involve the actual number of units here that were done, what year that were produced. So we have here standard quantity for actual what year? Production. The standard quantity, ladies and gentlemen, of X was equal to what, somebody there? 3 times the actual number of units here that were produced, yes. 3 times 500. Minus the standard mix. The standard mix, we had obtained it up there. The standard mix was what here, somebody? 1650. The standard mix of X was 1650. And also the standard price, we already have it somewhere.
2.
The standard price is what here? 2, like that. The standard price we have there is 2. So then this will now translate to what? Open brackets there, 300 adverse, isn't it? 300 adverse. So let us do the same for the material yield variance of Y. Material yield variance of Y. Material yield variance of Y will be equal to what?
5 times 500.
5 is the standard quantity per unit, isn't it? But now my students have been able to master that capital SQ is standard quantity for the actual production. Standard quantity for the actual production. So 5 times what here? 5 minus the standard mix from that standard mix table of Y, 2750. 2750. And then outside here, ladies and gentlemen, we should put the standard price per kilogram, which is
3.6.
3.6. You're right. So then at the end of the day, what figure are we getting here? 900 adverse. 900 adverse. So if you add the two, you will end up getting what here, somebody? 1,200 what here? Adverse. Thank you very much. 1,200 adverse. This is our total material yield what here? Variance. Total material yield variance. Total material yield variance. So now that marks the end of lesson 1. For those of you who are following us from Facebook, please keep on sharing our posts. And for those who would want to come for classes, Regional Center of Management, we are based at Commonwealth House, which is right opposite Galitos along Moi Avenue. We have CPA, ACCA classes. Early morning classes are available. We have day classes, evening classes, late evening classes, weekend only classes, online classes. We have everything for you. You are spoiled for choice. Thank you.